Guys, what's the crack? I've got a great guest with me today. Conn Stevenson. I've met Conn through a Telegram Bitcoin group, and he's very knowledgeable on Bitcoin. I'm looking forward to him educating me a little bit further on it. So, Conn, you're very welcome this morning.
Yeah, happy to be here. Yeah,
So, I
hoping.
suppose give us a little bit of an introduction into yourself and your background, please, before we get cracking.
Well, you'd probably be interested to hear that I actually don't come from any sort of financial or economic or computer science or anything that any background like that. I actually background in sports science. So, I done sports science degree over in Liverpool and Preston. So, no real economic background, no cryptography background, nothing like that there. So, which looking back in hindsight, probably a blessing because a lot of people I know from an economic background or the struggle to get Bitcoin and they come down that uh, finance background or economics background or and even people from computer science the development side can see it for the tech and sometimes get sucked down that and then they don't see it from the economic side. So a lot of those people who come up for 10, 20, 15, 30 years, whatever it is, coming from those backgrounds find it hard to unlearn a lot of things to understand Bitcoin from the ground up. So I consider myself fortunate that I had absolutely no idea of any of that stuff coming into it. So I think that can actually be a real advantage when you don't have any of those traditional finance background or anything like that there, because you're able to just see Bitcoin basically from first principles and understand it from the ground up. So yeah, my background in sports science, and then I found Bitcoin just the way most people do: see number go up, think put some money in it, hope it'll go up, and they can get rich. And yeah, so I went down a journey of looking for investments and stocks and everything, and I ended up coming across Bitcoin, a little section in a book called Alternative Investments, and one part of that section was cryptocurrency. And the first one I mentioned was Bitcoin. That's how I first came about it. I was back in 2017. It's actually a funny story because the way my final year worked out, I had no final exams, so I had it was module based final year. So the way it worked out is I'd work my final year in uni is probably the only year I actually really worked hard at university. Up until then, I probably just sort of breezed through, focusing on sport and having the crack. And so put my head down final year, decided to get on work done. By the time early April had come around, I'd already paid all the rent for final term, didn't have much money left, and found myself sat in Preston, right around the corner from the university library, with nothing to do. I had a practical exam at the end of May, so I had to wait in Preston for 6 weeks for this practical exam. But other than that, I had all my work done. I knew what my grade was going to be. I just had to basically turn up for this practical exam. So I was sat in Preston, nothing to do for 6 weeks. So I decided, okay, I'll put my time to use. I was already burnt out on sports, so it wasn't going to be sport related. So I decided to go around to the library and think, okay, well, I have 6 weeks, I can crunch something that's going to be useful. So I thought, right, well, once I finish uni, I'm probably going to go into full time work. So what do I need to know about? And I thought, right, well, I'll figure out something to do with money or finance or investments or something. So first book I ended up picking up was The Intelligent Investor by Benjamin Graham with commentary from Warren Buffett. And I ended up picking that up, reading it. And the first thing that struck me was the miracle of compound interest. I thought, okay, makes sense. Put money away, put a little bit of money away, and let compound interest do the work. In 30, 40 years' time, you'll have a nice pot for retirement. What you do yourself with a channel and educating people plan for retirement and stuff. So that was my thought process. I was really sucked down to value investing and picking stocks that you want to hold for 30 years, etc. So I fell into that there. Opened up a trading 212 account, uh, took some big tech stocks the way most people do. Again, at this point, I was mid 20, so I was willing to take on a bit more risk. So I had no, at this point, I had no gold, no silver, It's just pure tax stocks, pure risky bets. And then, like I said, I came to that there section in one book that focused on alternative um, investments. Put a little bit into Bitcoin, didn't even think about it. And it was just Bitcoin because it was the biggest. I thought it was the biggest, so put it into Bitcoin. And then actually, after I finished uni, I went traveling. I'm traveling Southeast Asia and made my way through Southeast Asia. Didn't check any of my investments at all. And it was actually two things happened in Cambodia on the. I was finishing off the last 2 days in Cambodia, and then I was heading to Bangkok to fly back home. So this is my last 3 days. All my money was pretty much exhausted, and I noticed something. I noticed someone was talking about Bitcoin in a hostel or something, and I checked the price, and the price had skyrocketed way up the 20K or whatever it was, the peak in 2017, and came right the whole way back. So I had missed that whole entire run up travel in Southeast Asia.
Yeah.
Which looking back now was a blessing because
Yeah.
I knew nothing about it. So I probably would, the first 100% raise I probably would have sold. The next 100% raise I probably would have bought back in. The next, once I went to the peak, I probably would have went all in. And then when it dropped like a stone, I probably would have sold and lost I don't know how much. So because I would have known nothing about it, I would have been using emotion. I would have been, caught up in the whole thrill of it. So I count that as a blessing that I missed that whole thing. And once I seen that it actually came back down and sort of started to level out, I was like, right, well, it hasn't went to zero, so I'll just, I'll let it trickle on, and maybe sometime I'll read into what it actually is because I had no idea what it was. And the following day, actually, another thing which stuck to me was, I went into a shop. It was like a little 7-Eleven to. It was basically my last few quid, and it was I was buying some supplies for the long bus journey back to Bangkok to get the flight. And I open up my wallet, and I still have. I can go and get them here if you want, but open up my wallet, and I had Cambodian riel and US dollars. I had $2 left and a whole bunch of Cambodian riel. In Cambodia, they have Cambodian riel, but they also accept US dollar. And the stuff that I paid for probably came to about $2.20. So I opened it up and only had $2. So I went to pay in Cambodian riel. I took out all the Cambodian riel to pay for the supplies. And the shopkeeper, when I opened my wallet, he seen that I had $2, and he says, I'll take the $2. Give me the $2 and a little bit of Cambodian riel. I was like, yeah, okay, give him the $2, give him a little bit of Cambodian riel. But I was confused. I was like, why would he not want the currency of his own country? Like, Cambodian riel is the currency of Cambodia. Why would he not want just all Cambodian riel? Because it never occurred to me that about currency strengths versus versus other nation currencies. It was just that was something that stuck to me on the flight on the way home. I just okay, so I have to figure out what this thing Bitcoin is. I have to figure out why people would want US dollar over their own currency. And so basically at home, looked for a job, found a job, and then basically any spare time I got, I was sort of going down, looking more into investments, into stocks, a little bit into Bitcoin, into all. So it was always on my mind. I was any time I got some spare time, I was always looking into these things, and I sort of trickled along through 2018, 2019, just intermittently trying to figure these things out. But then COVID happened. And I think it was Italy had locked down, United States, and over here we're getting their first cases. And it looked like the whole world was going to shut down. So the first thing I thought was, well, there's going to be a market crash. There's going to be a market crash across everything because when you shut down everything, the economy grinds to standstill and everything's going to come down. And I thought, for all the content that I've been reading and listening to videos and podcasts and all, everybody always talks about the opportunity. The ones that got the opportunity during the financial crisis in 2009, those are the big winners. The ones that when everybody was running away from the fire, they ran towards it. They ran to scoop up the real estate, the stocks, etc., that were a huge discount and that paid dividends, 10 years later. So I was thinking, right, this is my opportunity. I'm young. I can get things at a discount here. I can hold them for 20, 30 years and it'll be a real payoff down the line. So I separated everything into, basically came down to one of three decisions. I had my Bitcoin pot here. I had tech stocks and stuff. I also had the option of maybe I sell everything and maybe try and buy uh, a property to rent out or something. And so the first thing I looked into, because it was probably my smallest pot, was the Bitcoin. So I was like, okay, I'll look into Bitcoin. I'll probably skim over first, and probably won't think of it too much after. I went deep down the Bitcoin rabbit hole. By this stage, we were in lockdown. I was furloughed from the job, so I had loads of time on my hands. Everybody was sitting at home, not doing anything. So basically, getting up in the morning, going down the rabbit hole, basically full time. Every single day, I was just down the Bitcoin rabbit hole. And the longer I spent in the Bitcoin rabbit hole, the more it made sense to allocate pretty much most of it. My thought process was most of it in Bitcoin, and maybe the rest in gold and silver, as if Bitcoin fails, gold's going to do well. That was my thought process. But everything else just seems so. The more I spent down about the Bitcoin rabbit hole, the more everything else seems so risky. So I ended up doing that. I ended up just going pretty much 60% Bitcoin. The rest was in gold and silver ETFs. And then the longer I spent down the rabbit hole, still a few tech stocks, but the longer I spent down the rabbit hole, it was just a slow bleeding of these ETFs and tech stocks into Bitcoin. Every now and again, if there was a spike in gold or silver, I was cashing out and putting into Bitcoin. Spend more time down the rabbit hole, allocating more to Bitcoin. Spend more time down the rabbit hole, allocating more to Bitcoin. I actually got very fortunate. I cashed out at the gold and silver peaks in August that year. Got out of them into Bitcoin, sold all my tech stocks into Bitcoin. Everything was just in Bitcoin. At this point, I was 100% Bitcoin. So I owned my house, I owned Bitcoin, and didn't own anything else. And that's the way it still is now. Don't see any value in anything long term. Short term, who knows? But long term, only Bitcoin, and that's how I got deep down the rabbit hole.
Deadly, man. That's an awesome story. A couple of great things there, like compound interest for me, like that. I read a book on how to be a millionaire in my early 20s because I came from a poor family, and it seems so easy. Just find something you can compound, and just be patient, and you too will be worth seven figures if you just use this vehicle. With
Yeah,
the
one book that really I remember really stuck with me was Rich Dad Poor Dad.
yeah, me.
Uh, it was like the way it's, because the way it stuck with me is because it was one of the first two or three books that I read over in Preston. I read Benny Graham's Intelligent Investor was hard to get through because you're coming, you don't know anything about it. You're coming
Yeah,
from a novice perspective. But Rich Dad Poor Dad, the way it lays it out, it's like a story.
yeah,
And it's what was it, early 90s or something that was written. So but it still holds up today, even as a story. It's just even though the investment philosophy might not be too important going through the future, I think I'd still recommend that. Anyone's a brilliant read.
yeah. The principles are still hold true on it. Although he focuses on property investing, the principles all still hold true.
Yeah.
Um, and then the other thing you mentioned about losing your wallet being the best thing, when I'm consulting with people, I'm like, literally, best thing you can do is lose this, forget about it, and have a look at it in about 5 years. And if you can lose it for 10 years, it'll probably be better for you.
Yeah.
It's kind of funny. And when we're newer, we don't realize that, and we think that we have to try and time this market. And as you said, that everything happens in such a short period of time. And that's why it's time in the market that matters, because you can be out of the market for a day or a week and you can miss the majority of the movement in it over a couple of years. And then the last thing you mentioned that struck out to me was, it didn't make sense to you that why would someone not want their own currency? Surely that's more inconvenient. And again, I've experienced something similar to that as well. And it does sort of, if you're someone who just thinks, I think you're like, well, this doesn't make sense for everything I know about the world. Like, why would someone prefer if I gave them sterling rather than euros when I'm in Ireland? You know, um, that's awesome. I was wondering if you had any insights, because Bitcoiners in general, because they have such an overall understanding of the whole world, I think that's what Bitcoin does to you. The cost of living crisis that we've been suffering over the last 12 months, and sort of how do you see that going? Do you see it slowing down? Do you see it accelerating? Do you see it reversing?
Yeah, that's a tough one to gauge because you're basically from the how I say it going point of view, you're basically we're all at the mercy of basically a few central bankers and the decisions that they take. Um, how we got here is just, I mean, very simply, it's just been there was just been a rapid increase in the money supply over a short period of time dealing with COVID. Now, you can trace, why are these problems? You can trace those back. I mean, you can trace them right back to World War I, even before that. But I don't. I think go down that rabbit hole. That's a long rabbit hole. But or even 19 at the very least 1971 when we separated from sound money for the first time in human history. Actually, the first time in human history, we humans, for the most part, has been separated from any form of sound money. First time we owned a free floating fiat system, so not backed by anything. So the system was never going to work. I mean, Jeff Bush described it. It's an inflationary monetary system that requires constant growth and consumption on a world of finite resources. It was it was never going to work from the first day. So this is a 50-year failed experiment, and it's just the cracks are starting to show. Well, the cracks showed in 2008. That was the signal. That was the signal to bail out of the system. And they didn't. They just bail out the banks and sort of reset everything. And so what we're doing now is we're in a perpetual state of kicking the can down the road, but you can only kick that can down the road so far, and someone has to pay the piper eventually. So we had this rapid increase in the money supply to deal with COVID. The other way to play that would have been to let everything fail, and you would have had basically carnage. You would have had stock market crash, real estate crash. Everything would have completely. Everybody would have been there were mass insolvencies across the board. So that's not politically feasible. So you have to look for a way to, put a plaster over the wound, and that they basically printed an ungodly amount of money. And then further from that, you have the war in Ukraine. Um, that makes it harder to optimize where commodities go. A whole, Russia's the most resource rich country in the world. They have more resources than the next 4 or 5 countries combined. So when they went to war with Ukraine, it's two things. It's a war with Ukraine, obviously. That's a bad thing. But it's also an economic war with Europe because Europe is so reliant on Russian energy, and you can see those cracks in the system. As such the worst timing. Germany had turned off their nuclear reactors literally as the war started, and now gas prices and oil prices and everything through the roof right across the board in Europe. And so yeah, on top of that, you have Chinese lockdowns. Their zero COVID policy. Chinese basically the factory for the world. They are the world's factory. They make our things. So they're the manufacturing hub of the world. They're also the shipping hub of the world, and that's locked down. So you have supply chain issues there. You have energy issues in Europe. You have a whole bunch of money in the system trying to get to different places. Then that rapid increase in the money supply, that broad monetary and fiscal stimulus, that causes asset inflation. And who's the people with the most assets? It's the wealthy. So the upper class and maybe to a certain extent the upper middle class have lots of assets. They have the bigger pensions, they have more real estate, they have more stocks, and those are the sort of assets that get inflated when you increase the money supply, because that's where lending restrictions get eased, and the people with the best credit just basically use that because they don't those sort of people don't need money to get by every week, so they're just taking that excess cash and they're taking those easing lending restrictions. They're taking that opportunity and just buying more assets. So they're buying more assets with that money, and they're borrowing against their portfolios to buy even more assets, and they're just leveraging up. And so when you have that asset inflation, people with the most assets, they get wealthier, where the people at the bottom who work wage to wage, not only do they not get wealthier, they actually suffer because they don't own any assets. They're inflating with that increase in the money supply, but also their wages are losing value in real terms because of inflation, the higher inflation caused by that broad increase in the money supply. So you have this massive wealth gap being getting increased every time there's that broad fiscal monetary stimulus, that their wealth gap increases. And so you have the ones at the top, the rich getting richer, and the poor. You would, on a nominal basis, the poor are staying the same, but actually in real terms, they're getting much worse because their wages aren't going as far relative to goods and services. So
Yeah, and I had a friend of mine on the phone to me yesterday, and he was talking about like how much his car had gone up in value, and like it sort of fools people because the car isn't worth anymore. It's just that the currency's gone down in value, and it's like, yeah, you can sell that old car, and you might get a couple of grand more for it, but then when you try and re-enter the market with that money, you can't buy anything more than that old car. You know, you're net in the same position. In fact, the currency is actually less when you bring it into market and you try and buy something else with it because all the assets have gone up and it's your purchasing power that's gone down. And that's the way that I think people who don't understand the money supply, which is everyone, including myself, until I actually started to learn about it, you're fooled when inflation happens to some degree because you see silly things like the value of your house going up and you think you're winning, but really the net cost of your living is what's going up, and I value it on. I think how you value your life is you value it on time, because time is the thing you should value and measure everything on, and if as the world changes you're losing your time, meaning maybe you have to work more or maybe you can't spend your time in doing the things you want as much, well that's how you're net losing in the game, as opposed to valuing, like we use euros in Ireland or pounds or wherever your currency is to measure how well we're doing, but it's a terrible measuring stick because as we know, it changes all the time. So I think time is the best measure of, but I know time is very difficult to measure to bring it over into the real world, and you can sort of only do it by lifestyle. But I
yeah,
get it.
if you think about it, if you were born in the 50s or 60s, you probably would have been born into a home where one of the parents went to work, and that wage was enough to buy a house, sustain a living, and the other parent stayed at home, mind the kids. Today, you have to be getting a hell of a wage to be able to sustain your family on one wage. It's now both parents are working. Um, not only that, you probably have three jobs between both parents, or maybe two full-time jobs and maybe a couple of side hustles, a couple of things that they're doing on the side just to get by. So and the house prices now are out of reach for most people, especially entering the workforce. If you're entering the workforce young, those house prices are completely out of whack now. And so the time, as you said, the time is the thing. The time you have to put in now to get that same house that you could have got on one wage in the 50s and 60s is increased so much more because of the money we're using is so worth so much less. And we're working more, working harder, working longer hours, working extra jobs, and we're still not getting any further. It's that constant. It's that as he says, and as Robert Kiyosaki says in Rich Dad Poor Dad, it's that constant rat race. You're constantly on the wheel, constantly spinning the wheel, and you're not getting any further. And that's what it's like for a lot of people. It's constantly week to week, month to month, where they can't. And then people do get that wage raise. People get maybe the promotion or whatever, and they upgrade their lifestyle a little bit, and they're right back to square one because you upgrade your life, you also upgrade your costs, you upgrade your liabilities, and you're still back to where you were. You find yourself back to where you were. You're constantly now relying work or week to week, month to month, and you can't sort of escape that rat race. And that's how the rich escape the rat race. They put their money to places where their money goes to work for them. Via compound interest, the broad increased money supply increases the asset value, and they can borrow against that to sustain their living. So it's a very, very unfair system. And I don't blame anyone. Like if you're born into wealth, you're just basically playing the cards you've been dealt. There's nothing malevolent about it. You're basically just you're playing the game. You're playing the game how you see it, and you're playing the game. You're playing the game that cards has been dealt to you. So yeah, but it's very unfair system. It's something I detest. Really, it's disgusting.
To a degree, when you understand the system, it's easier to get ahead. So, like you could argue that if you understand the system, it's easier to get ahead, but it takes you have to change. So, my story is I used to live in a caravan. I had no pot to piss in, okay? But the only way I changed that situation was I went into deep deferral of gratification. That I lived way under my means, not at my means, not close to my means, way under my means, so I could save and invest and grow. And that's what pulled me out of there. And as you said, though, as people get the wage increase, they upgrade their life. So they're, we are guilty, I think, in the Western world of living too close to our means or at our means, rather than if we actually learn to live under our means, we could get asset rich, and then we could have a much better, fair enough, we might have 5 or 10 years where we're not keeping up with the Joneses and we don't have as flashy a car as our neighbors, but then we get to spend the rest of our we do that for a decade, and then we get to spend the rest of our decades having our time back. And that's an education thing, because when you understand the system, it's like, get asset rich and it's better, but to get asset rich you have to defer gratification, and basically save money, so live a good bit below your means. Um, I'd love to get into Bitcoin, Con, and have you try and explain Bitcoin and why the world needs it.
Yeah. Well,
That's
I guess, well, basically, Bitcoin, I mean, it's an invention, but it's also a discovery. It's the discovery of absolute scarcity. So it's also a return to sound money. So I know a lot of people describe Bitcoin as digital gold, and it's a good way to describe it for people that don't understand. It's a you know
baby
it's
step.
yeah, it's a baby step, but it's so much more than that. It's you can almost describe it in two ways. It's a monetary unit itself, but it's also a network. So Bitcoin, I mean, short and simple, it's just technology like all money. So, but it's the best form of money that we've ever had. Very simply, it satisfies the two key dimensions of money, which is scalability of value across time and scalability of value across space, better than anything that's ever existed. Um,
Could you explain that, Con, just to someone who mightn't understand that?
yeah, so scalability of value across time. So basically, will the money hold its value over time, or will it depreciate? Um, and a good example of that would be, fiat currency is very poor for scalability across time, but gold was historically better. Gold and silver historically better than fiat currency for holding its value because of their inflation rates. So a good example is the British pound. It's the oldest fiat currency still in existence, like 371 years, 372 years, something like that there. But when the British pound was created, it was worth £1 of silver. So £1 to £1, pretty much. Um, Gold was added to it later in terms of the conversion. But essentially, if your family's wealth on the day the British pound was created, um, if your family's wealth was tied up in silver, and you on that day that the British pound was created transferred your wealth into the British pound, you would have depreciated versus the silver to today by a rate of like 99.9%. It would be completely worthless versus what it would have been had it been held in silver. So, you know, a British pound today gets you like, or a pound of silver today gets you about 250, 300 pounds sterling. So, it's pretty much worthless compared to what it would that first conversion. But even silver would have lost your value as well over time, because silver has an inflation rate of like 25% because of its utility. It's used in engineering and technology and all the rest. So, but gold historically, for 5,000 to 6,000 years was the apex monetary unit for stability across time. It has an inflation rate of 1.5, like 1.5 to 2%. So very hard to get out of the ground. It takes time, takes cost, takes energy, takes labor to get it out of the ground. So that's it's if the money is very hard to produce, it's going to hold its value for longer over time, because scarcity is inherently linked to value. You know, oxygen is abundant, but it's valuable. Like we need oxygen, but we can't use it as a money because it's everywhere. We can't use sand as a money. It's everywhere. Um, but gold is very hard to get. So that for 5,000 to 6,000 years, that was very easy to use as gold. Um, it's extremely durable as well. You know, you can't just, it's very hard to destroy. So gold was a perfect store of value for generations, for, you know, like I said, 5,000, 6,000 years for holding your value. But the problem with gold is it's very hard to transport from A to B. So we're on, as we became a more globalized world, as we started trading further afield, it became harder to. Uh, if I was to transfer gold back in the day from here to America, for example, I would have to load that gold up onto a ship, pay security to watch it because it's a security risk, someone to steal it, and then transport that for weeks across the ocean to America. So gold wasn't great for sailability across space. Sailability across space is, can I get the value from A to B efficiently? And that's where fiat shined. Fiat, which started off as basically representative money, paper note certificates. You would deposit your gold or silver somewhere, and they would issue you paper notes that you could redeem for your gold at a later date. But eventually, heading down the line, government issued fiat currency, which was great for sailability across space because it was more divisible than gold and it was easy to transport. And then now with the credit and debt based system, it's basically just ones and zeros in bank accounts that it's basically a ledger system that you can change. So, but Bitcoin satisfies both, better than both, because Bitcoin has a hard cap 21 million theoretical supply. So Bitcoin can't be debased. It can't be inflated away. So I know if I hold, like, just use big numbers here. If I owned one Bitcoin, I know that's 1 out of 21 million forever. That I will always have 1 out of 21 millions, piece of the pie, really. So I know if I put away my money for generations down the line, let's say in 100 years, 200 years, that value is not going to bleed. There's no economic energy loss in that money over time. And then for sailability across space, well, I can, on chain, I can send it anywhere within an average 10 minutes. But using the Lightning Network, which is a layer built on top of Bitcoin, I can zip it to anywhere in the world with an internet connection instantly. And that's final settlement. That's bear to bear final settlement. So yeah, Bitcoin's just better money. It satisfies the two key dimensions of money better than anything. And I think anything that promises to do it better, really just you're fooling yourself. There's a whole load of other things, other parts of the recipe of why Bitcoin is better money than anything else. And the world needs it because we need, like I said, there's certain people. The way the world exists today is you can win or lose the lottery of birth. We are born. Doesn't matter whether you're born into wealth or into a working class. If you're born here in a more economically developed country, you've already won the lottery of birth because you're born in a part of the world where you have so much opportunity and you have a relatively strong currency than if you were born in Kenya or if you're born in Venezuela or something like that there. So what Bitcoin does is, if we go to a Bitcoin standard where we're all using Bitcoin, it levels that playing field. It levels that equality of opportunity. It won't level the playing field for equality outcome. You'll never get equality of outcome, but we can get equality of opportunity on the base layer of money, because if everybody's using the same monetary unit that cannot be debased in every part of the world, your ability to save your time and energy is the same in Kenya, is the same in Venezuela, is the same in the United States, it's the same in China, it's the same everywhere else if we're all using the same monetary standard. So Bitcoin over time eliminates that lottery of birth. It eliminates that need for people to, and I'm sure you know of plenty of people here in Ireland that emigrate, but where do they go? They go to the United States, they go to Canada, they go to Australia, they go to the UK, and even more so now, probably the Middle East, Dubai and Saudi Arabia, where they're investing loads of money and building up. You never hear of anyone going to Venezuela. You never hear of anyone going to any of these countries with weaker currencies or with weaker opportunity. And that's something that over time, given enough time, will fade. I think people will not, you know, the real winners of a Bitcoin standard will be developing countries. They will spearhead this adoption. They'll be the big winners of this over time, because they'll, if you think of some countries that have huge resources, massive resources, for example, in Africa, they're having, you know, they're getting their resources, their commodities and stuff bought for pennies on the dollar, being sold to the West. They can't lift themselves out of that poverty really because of the inflationary monetary system that we use today. But Bitcoin, hopefully over time, gives them a chance, gives all these other developing countries a chance to really save their wealth and not have to rely on foreign investment from the West. So they can keep their resources, they can pay their people a wage on Bitcoin, hopefully, that saves their value over time and space. And yeah, it just makes for a more equitable world where you have opportunity across the board.
Yeah, and even on that, like it's the solution to financial services to a lot of the developing world because it's a mobile phone. You don't have to rely on another
Yeah, like
a company coming in and go, we're going to give financial services. It's like, well, you don't need it. The Bitcoin network will give it to you if you have a phone.
yeah, I think 80% of the world is unbanked or underbanked. So especially in Africa, more people have, as you said, more people have mobile phones than they do bank accounts. So yeah, it just makes this. Africa is going to be a huge winner in this, really, over time, given enough time. Like.
Yeah. Um, it's kind of interesting as well. I don't know how true it is because I haven't studied it in any detail, but I remember in a book I read just about money, it was talking about how Africa ended up in the situation it's in is because their money was manipulated like years and years and years and years ago when they were using glass beads, and the Europeans were able to create the glass beads, whereas they had no ability to. So the Europeans could come in, and because they could create the money and the locals couldn't, they could literally buy up all the assets. And we see like hundreds of years later the effect that the bad money had when a better money came about. And perhaps we see that on the opposite now is where they get their revenge if they embrace the good money. Perhaps if we
Yeah,
go forward in 200 years, it'll be like, well, the developing worlds embraced the better money, and that's how they were able to regain control or turn the whole situation around. It'll be interesting to play out. We
a lot
probably
of
see it.
yeah, a lot of unfortunately, like a lot of slavery actually started with hyperinflation of those places. As you said, that Europeans came in, um, hyperinflated those local economies, and when you have nothing, when you have no assets, you have no money to save in because it's been hyperinflated. Right? The only thing left you have to give is your labor. So, unfortunately, yeah, that's how a lot of that played out. Funny you mentioned that. That's Bank of Zimbabwe, $10 billion note. That's the state of some of their currencies now. Like so, um, yeah. Imagine you saving. And here's another example actually. Venezuelan bolivar. These are Venezuelan bolivar from December 2018. So the denominations are actually similar to Europe: five, tens, 20s, 500s, etc. 2 years later, December 2020, 500 million,
Jesus.
200 million, and 1 million bolivar. Over the period of 2 years, what you would have considered pretty much life savings, you thought you would have been set for life, is now just printed on a note, and you can maybe get a coffee with it. So that's I keep that as a reminder. That reminder that the money we use is like we are at the mercy of central bankers, and like literally in a very short period of time, if your wealth is held in that money, it can be literally blown up overnight. It can be made worthless overnight, and that's a constant reminder for me anyway.
Yeah, that's awesome. In the like I suppose what all humans are seeking is somewhere scarce because we value scarcity. Scarcity is our life, our time on the planet, and then our economic energy. We need to store it in something scarce, and we look for what is the scarcest thing. Ideally, it's money, but the thing we call money, currency, it doesn't fulfill that. So the people who are educated understand, and they look for scarcer things like properties or like stocks or like gold. But like if Bitcoin, as you say, is I can't remember what word you used, but ultimate scarcity or
Yeah, it's absolute scarcity.
absolute scarcity, correct. Well, that is where the majority of our energy will go because we're all just seeking scarcity to to store our value in. And for me, like that's a big step for beginners. It's just like take them to it's digital gold. It does everything gold does. It just does it better. Just like Spotify is better than a CD. But that was pretty awesome to take it a little bit further and see that as we both know, as Bitcoiners know, it's
Yeah, and
bigger
I'd
than
say we actually don't want money. We don't want little green pieces of paper. We don't want digital tokens. We don't want bars of gold. Those aren't. We want money for its prospective exchange utility. We want the things in the future that we hope that money will buy. Like
provided. Yeah.
like a nice car or a house to live in, pay for a wedding, a holiday, whatever. Those are the things we actually want. We don't want little pieces of green paper with some dead president's head on. Like those aren't the things we want. So basic money is just basically a technology that we store our value in, and we hope will keep its value long enough so we can get things we actually want and need and crave. So that's basically all it is. It's a shared fiction that only exists for humans. It's a shared fiction that we created so that we can organize and specialize and coordinate in large numbers. Because ultimately, if we didn't have that, we'd have the barter. We'd have barter. Basically, you have apples, I have oranges. How do I get your apples if you don't need my oranges? That's only one of many problems associated with barter. But yeah, money basically is just this technology that we have thought up, that we have created to basically act as this intermediate vessel to hold our value. And that is all it is really.
Lovely. I'd like to get into talk a little bit about Ethereum to piss you off a bit, maybe. But I think you're going to be able to provide some good insight. So just as I was setting up the podcast, I get my comments, and I have a comment there: "ETH moving to proof of stake will kill Bitcoin," and I hear this all the time. And I'd love you to try and maybe just explain the difference between. And I know, Jesus, we could do a whole podcast on this, but take it as deep as you want, or you don't have to talk for hours on it. But maybe the difference between Bitcoin and Ethereum, because I don't see them as the same thing. And maybe touching on proof of stake and proof of work.
Yeah. Well, the thing about Bitcoin is the discovery. It is the invention. That is you can't rediscover the wheel really. So Bitcoin versus Ethereum. Well, Ethereum, in my belief, is just I think it's just a scam. It's a it's an illegal unregistered security that was offered to a small portion of people in a pre-sale, and it's centrally controlled. It's inferior technology as well. It's they see the thing about Bitcoin is, if you want a digital currency, you have to choose two of three things. You have decentralization, you have security, and you have scalability. Now, Bitcoin went for decentralization and security at the expense of scalability. On the base chain, it can't scale. That's why it builds on top in layer two technologies like Lightning Network. Those are things that are used to scale Bitcoin. But on the base chain, it's very simple, very it it's decentralized, and it's a secure network, and it does three things reliably, which is send, receive, store value. That is it: send, receive, store. Those three things are all you need on the base chain. Very simple, very reliable, very secure. Ethereum, on the other hand, went for scalability on the base chain. Now that's an issue for many reasons, because remember, you can only have two of the three on the base. So if they're prioritizing scalability at the base chain, they're sacrificing decentralization and they're sacrificing security. So whereas Bitcoin is a trustless system, it removes the trust from its, in today's fiat system, you have to trust your bank. You have to, there's a lot of trust involved. With Bitcoin, there's no trust involved. You can verify everything for yourself if you're on your own node, for example. With Ethereum, there's trust involved. Ethereum, you have to trust that, first of all, you can't, me and you couldn't run a full node, even if we wanted to. You can run like a node that goes back. You can pay like still an extortionate amount of money, but you can pay to run like a node that goes back. I think it's like 100 and something blocks or something. So you can't even see the full. You can't verify for yourself if transactions are being changed way on down the chain, way back in, So there's a lot of trust involved. It's very centralized. It's basically a company of the Ethereum Foundation, like, and they have a marketing team, for example. So there's a lot of trust involved. You can't verify if the Ethereum you're getting has been spent before, or you can't. There was a DAO hack way back when, I think it's 2016 or something. They just simply reversed it. They just simply stepped in and reversed the hack. Now you might think that's a good thing. That means the hacker didn't get away with all the money. The only reason the hacker got away with all the money is because the Ethereum was an inferior monetary system. There's no hacks on Bitcoin. You cannot hack Bitcoin. You cannot get in. That's an impenetrable network. You can hack exchanges. You can hack all these other things. You can hack all these things built on top, but you can't hack Bitcoin itself. Bitcoin is the most secure network on the planet. And Ethereum is just simply, it's just this thing that's riding on the coattails of Bitcoin success. And I think if you look into someone on Twitter actually posted it's like a roadmap of what Ethereum looks like, really, and all the things involved in it. It's the most complicated. Like, if you think our financial system is complicated, this thing is just an absolute mess, to the point where you especially for a novice, you wouldn't be able to tell heads or tails of what's happening on the network. And all these other protocols that's built on the Ethereum network, you don't know how levered up they are. If you put $1 in Ethereum, you don't know if that dollar is being counted 2, 3, 4, 5, 6 times on all these other different things, which bloats up the value. Now, it actually came out there the other day that that's how Solana was operating. Solana, which is another altcoin, they were bloating up their value by double, triple, and quadruple counting every dollar that was put into it because of all these other things that's built on top of Solana. So basically, they were counting, if you put $1 in Solana, they were counting it up on all these other chains and basically bloating out the market cap. So you have to wonder how much value is really in Ethereum. If they're bloating up how much value is contained in Ethereum, and then you have to consider, the fact that all these people who bought in the pre-sale, these venture capitalists, I think JP Morgan actually funded some of it. Why were they buying in a pre-sale early, and what are they going to do with that ether? Are they buying in pre-sale before it went so they can hold it for 20 years? No, they're buying that pre-sale so they can slowly bleed it on to new common retail participants. They're not going to dump it immediately because that would crash the price of Ethereum. But every time you get those spikes, you can be guaranteed that some of those people, those insiders, are slowly releasing that Ethereum, and eventually it's going to be retail participants that get hurt. It's doomed to fail, like most other altcoins. I think, in my opinion, it's doomed to fail eventually. Now, in the interim, as we're still in this inflationary monetary system, it makes sense for a lot of people, with smart contracts and DeFi and all and the NFTs and all the rest, because those things are being built on Ethereum network at the minute, and maybe not so much on Bitcoin, because Bitcoin moves slow. Bitcoin moves slow. It's slow. It's methodical. It takes its time. It makes sure everything's right. Bitcoin's had zero downtime. Nothing in the history of the internet has had as much uptime as Bitcoin. It has complete uptime since the day it was created. No network breaks, no reversal of transactions, none of that there. So it moves very slowly, very methodically. Make sure that there's no breaks in the system, that there's nothing that can go wrong. Whereas Ethereum is pretty much the opposite. They move fast, they break things, they fix it, they put a bandage on it, they go again, they move fast, they break things. There's constant hacks, constant reversal of transactions or things collapsing on the Ethereum network. So it's just a real mess. It's not what the world needs. It's now, if you're an NFT artist, for example, you might think, well, Ethereum's the place to be, and that's fine for you. If you're a novice and you don't understand what you're doing and all you're thinking about is I want more money, and you're trying to make a wee bet and gamble, work away, that's fine. But if you're looking to secure your value for a long term and hedge against the inevitable collapse of the global fiat system, you can only, Bitcoin's the only choice. It's the only thing that's going to come out the other side, in my opinion. So, and as I said, yeah, proof of stake versus proof of work. Well, the thing about proof of work is just decentralized consensus mechanism. It requires numbers on a network. Or sorry, it's basically the use of energy to maintain the network. That's basically what it is. The Bitcoin miners, they're using a tremendous amount of energy trying to solve these blocks. So people think it's like a real complex puzzle. It's not really. They're just there firing out random guesses, like millions per second or whatever, and that takes a tremendous amount of energy. So once a 10-minute block is solved and we're on to the next block, all these miners around the world are just firing guesses, expending a huge amount of energy. So when a miner wins that block and gets that Coinbase reward, that block reward, for certain that it has taken a tremendous amount of energy. It's taken cost to get that money into the system, because money should not be able to be created for free. There has to be a cost. Otherwise, we just have fiat currency. Fiat currency is created from nothing. Proof of stake, that is not, proof of stake is essentially what we have in the fiat system. The rich get richer. If you have a whole bunch of Ethereum, if you're a big stakeholder, you're more likely to win blocks than other people with less stake. So basically, the ones with the most stake will probably get the most rewards in the long run, and they'll have the biggest say over the network. So proof of work is the only way to have a decentralized system. You can't have a decentralized proof of stake system. In fact, I'd argue that Bitcoin is the only truly decentralized network out there, and that comes from pretty much all the ingredients that went into the creation and discovery of Bitcoin. The whole recipe of how it came about, it was a spontaneous thing. Like, even the fact that the founder is anonymous and he disappeared after it, that's a huge leg up. Every other altcoin has a founder or has a company behind it or something. That's a single point of failure. So, the whole, even if you think about, like, what is a blockchain? What is the purpose of a blockchain? The blockchain is just a way to decentralize the method for validating transactions. If you think about the fiat system as it exists today, it's centrally controlled. You make a payment from A to B, and it's the banks that validate that transaction. It's a centrally controlled system that validates those transactions. What the Bitcoin time chain does, or the Bitcoin blockchain, what it does, it decentralizes that method of validation. So it separates that validation process and takes the trust out of the system, and it does that uses a consent. The best method for decentralizing the process of validation is a consensus algorithm that depends on competition. That competition involves risk and reward. That competition is the mining competition for the block reward. The block reward is the reward. The risk is the cost, the energy you have to pay energy bills. If you're a miner, people think you're a miner, you're just using electricity. Maybe it's like your home electricity bills. No, their electricity costs, their electricity bills are huge. They're massive. They're big, massive, industrial size projects. Like, so the reward is the token of value, Bitcoin. The risk is the energy cost, and the competition is these miners all competing to get the next block reward. So you need a token of value. Therefore, if you have a token of value, your money. So if you don't have the token of value, then you don't have the risk and reward. You don't have the reward that the competition depends on. Because they're all trying to get this reward to compete, and that keeps them playing fair. So if you don't have the token of reward, you don't have the basis for competition. If you don't have the basis for competition, then you have to centrally control validation. And if you have to centrally control validation, you don't. There's no need to have a blockchain because it's not decentralized if it's centrally controlled. So the token of value, the basis for the competition, which keeps miners playing fair. Because if you're a miner and you mine a block with an invalid transaction or someone that double spended, for example, you're just going to get kicked off the network. So you'll have expended all that energy, all that cost, which is associated with proof of work. And in the end up, you'll have been kicked off the network. Your block will have been invalidated, and you'll have gained no advantage, and you've been locked out of the system. So there would have been a huge economic cost on yourself because of that proof of work. That proof of work takes cost, it takes energy. So all these things combined creates the perfect decentralized ledger. If you take one thing out of it, it doesn't work. It's just a perfect engineering masterclass of human incentives. And greed. Whether some of the miners probably don't even believe in Bitcoin. They don't. Maybe they're just in it because the margin of profits are so great, and that's fine. Because when they come into the network, they're actually strengthening. The more energy, the more hash power in the network actually increases the security of the network. Because if you want a 51% to attack the network, for example, you have to you have to get 51% of the hash power. Not only that, you have to actually sustain that for a long time. So let's say 100% of the hash power is every miner today. If you were someone who's coming on to attack the network, every time you load up an extra miner, that actually increases the hash power a little bit more, which increases the security, which increases the cost to attack the network. So it's a perfect system. That doesn't mean that Bitcoin is perfect. No money will ever be perfect. There's always trade-offs, and obviously the trade-off that I mentioned was scalability. You can only have three. You have decentralization, security, or scalability. Bitcoin sacrifices scalability for those two very important ones, which is decentralization and security. So yeah, proof of work is the only way you can have a decentralized distributed ledger system. You can't have a decentralized distributed ledger system without a token of value. I've seen a lot of people saying, "Oh, let's decentralize voting and let's decentralize all these other things and not have a token of value." It's like, well, what incentive will, if you're a node runner on one of these other blockchains, what incentive have you got to play fair? If you're not competing for a reward, why would you play fair? Why would you not, want to exploit that for your own gain? If there's no ramifications for not playing fair. And that's what's brilliant about Bitcoin. You have this competition for that reward. It keeps everybody playing fair, and it keeps the network safe. You don't have that in Ethereum. You don't have that in other proof of stake systems. You don't have that on blockchains that haven't got a token. And so the way I see it is all these things that people see that maybe is useful on Ethereum, like NFTs or something. If there is a marketplace for that, if the world wants something like that, that will more than likely be able to be built on other layers of Bitcoin. Because you want your foundations to be strong, and there's no foundation stronger than the Bitcoin base chain that base network, like I said, puts security and decentralization ahead of everything else. So you have this strong foundation, and you need strong foundations if you want to build complex things on top. You can't build complexity on the foundations. You can't build a house on sand. You cannot build. You have to have solid bedrock. You have to have solid foundations if you want to build complex things on top. And that's what Bitcoin's only 13 years old, or is it? Yeah, 13 years old. So it's moving slow, and it's building these strong foundations. And if there is to be complex things built on top, like all these side chains and space chains and layer 2 technologies and all these other things that are being built now, they will be built on Bitcoin. The Bitcoin will be the network on which they'll be built on eventually. And people have this idea, well, you'll have Bitcoin for your savings account, and you'll have Ethereum for the smart contracts, and you'll have Dogecoin for your currency. It's like, no, all that will be built on the strongest foundations, because if you can't corrupt the foundations, you can't have corruption. If something breaks on Bitcoin, like if a Lightning transaction breaks on Bitcoin, it doesn't affect the base chain. You can settle it. You can settle that dispute up here by closing channels and stuff, but it doesn't ever affect the base chain. The base chain is a solid foundation on which everything else can be built.
It's almost simple at a
Yeah,
really at a really high overview. When you see how it works, it just works out. And I think you mentioned it, just incentives. Like regardless of where you fit into the Bitcoin network, whether you own Bitcoin or whether you mine Bitcoin or whether you build on it, everything is just out of human incentives, and it's programmed into us. It's our survival, that we all operate out of self-survival, and it just beautifully engineeringly net leverages all that. It's great, this sort of system of system to store value across time. Um, I'd like to. I'm confident on Bitcoin's success, and I just see it eating our world. I don't know the timeline on it. Most of the things I understand, I'm like, yeah, well, I don't see that as stopping Bitcoin. But do you see any things that could stop Bitcoin or affect Bitcoin or cause Bitcoin to fail, or is it just unknown unknowns, something that we've never seen before?
yeah. Well, there's always room for black swan events. Like, you can't ever attribute 100% certainty on anything really. So
Yeah.
there's always that room for an unknown, as you say, black swan event. But there is things that Bitcoin needs to sort out. There is things like in there's, well, if you want to get really technical, there's the 32, or sorry, the 38-bit integer problem, which, or no, 32-bit integer problem, which is a problem in 2038. But Bitcoin uses unsigned integers. I'm going way into the technical parts here, but that is going to be a problem for Bitcoin. We'll be dead. I think it's 2106, the year 2106. That's going to be a real problem that they're going to have to overcome. It's going to affect the time stamping of Bitcoin. Yeah, 32-bit unsigned integers. That's a problem that they're going to have to fix, maybe with a hard fork. So you would imagine by 2106 would more than likely be on a full Bitcoin standard, and yeah, you could communicate a hard fork, or maybe they don't. Maybe they fix it with a soft fork. Maybe they fix it with a bug patch or something. But I'm not really worried about that. Well, for starters, because I won't be alive. But um, I'm not really worried for Bitcoin about that, because Bitcoin attracts the smartest minds in the world. Someone will figure this out maybe in the next couple of years. Bitcoin attracts the smartest minds in cryptography, in computer science, in
Yeah,
economics.
look at how the world has changed in the last 80, 100
Yeah,
years. Like, I think we're going to figure out any problems.
yeah, that's it. And then, well, one problem that needs to be figured out probably in the next 10 years is Lightning Network scalability. So just in theory, and it is only theoretical, the Lightning Network as it exists can do 60 million transactions per second, which is like, I think Visa's like 1,000. So it's it's already so much better than anything we can even dream of. But the thing about Lightning Network, because it's a layer 2 thing, it can centralize, it has privacy concerns. And there's a problem. There's a Lightning Network called Renee Pickard. Follow him on Twitter. He's been very vocal about Lightning Network scalability problems. He's a Lightning Network developer. He's trying to figure a lot of these problems out. With channel balancing, there's going to be problems with channel balancing. So if you have a globalized world that's operating on a Lightning Network, for example, you can't have payment channel failures. You can't have those downtimes, and so there is things to be figured out with Lightning Network. There's things to be figured out with space chains and side chains, like Fedimints, for example. community custodian solutions. There's a whole rake of things that need to be figured out on Bitcoin layer 2 solutions and other side chains and stuff. But the Bitcoin base chain, I think, it's perfection. Like other than that 38 or 32-bit integer problem, I mean, there's nothing. People always say, well, what about after 2140 when there's no block reward, and how we'll we'll definitely be on a Bitcoin standard by then, and the incentive will not only be to verify transactions and get the transaction fees, which will be astronomical, because the world's value will have fit into 21 million Bitcoin. So each transaction, if you're competing for transaction fees, that's going to be huge. But not only that, we will have all our value in Bitcoin. So the incentive to verify transactions, keep the network safe, will be to hold the value of the world. So that's not even a problem. And if everybody's value is tied up in Bitcoin by 2140, people say, well, if lots of miners come off the network by 2140 because there's no block reward, that opens up to attack. Well, who's going to attack the Bitcoin network if the whole entire world's value is contained in Bitcoin? Who would attack the network then? There'd be no incentive to do it. You'd be shooting your nose to spite your face. It doesn't make economical sense to attack the network at that stage. And I think by then you have massive industrial size mining on a huge scale. Well, that goes into a deep rabbit hole of what the world will look like on a Bitcoin standard.
That was my next question, if you want to roll into that.
Yeah. Well, the world as it exists today is an inflationary monetary system where assets rise in value because of the debasement of currency. So you have the constant and predictable fall in value in currencies, and scarce assets increase in value relative to those currencies. On a deflationary monetary system, which if the world like Bitcoin's not deflationary itself, it's not going to go to 20 million to 19 million to 18 million or anything like that. It's 21 million Bitcoin. But the thing about if you self-custody your private keys and you die, or you're in an accident, or you go into coma or whatever, or you go to jail or you lose them, that Bitcoin's gone.
Lost.
It's that Bitcoin. It's not essentially. It's always on the blockchain, but
but it's not a network. It's not liquid.
Yeah, so it's not liquid, so it's not moving. Those coins essentially become dormant. And if you lose your private keys, you're essentially making a donation to the rest of the network, because the purchasing power relative to goods and services of everybody else's Bitcoin that they have control of will increase. So in that sense, it is deflationary. It's slightly deflationary, and a deflationary monetary system is a complete shift. It's a different world. It's a different mindset. It changes human behavior. It changes consumer behavior, for example. And that has ramifications on a lot of things. One thing it's going to have ramifications on is every other asset. Every other asset theoretically will lose its monetary premium, and probably all of it. So real estate market's 350 trillion. Stocks and bonds are 120, 150 trillion. Gold's like 12 trillion. All these monetary assets are going to get sucked slowly and eventually suddenly into Bitcoin eventually, because on a deflationary monetary system, the money outperforms everything else given a long enough time period. Now you'll still have real scarce real estate, for example. Like if you have a penthouse overlooking Central Park in Manhattan, that's highly sought after. That might outperform the money given a short to medium time period. If you reduce the monetary premium, let's take real estate, for example. If you reduce the monetary premium on real estate on a deflationary monetary system, there's no incentive to ever buy real estate to hold as an investment, because it will always underperform the money. So Bitcoin will, my house now, right? Let's say in 10 years' time, my house is worth, not just throwing out a number 0.1 Bitcoin or something. I can expect 10 years later for it to be worth half that, and 10 years after that to be worth half. Everything in Bitcoin terms is always decreasing in value. It's always being everything's always worth less Bitcoin
Is
given
that,
a long enough time period.
is that Con, do you think, while we're in the adoption phase, and will that slow down in the future? Like it's easy to see now that of course nothing's going to keep, well, not of course, but it's
Yeah, so
nothing
the
to keep up with Bitcoin.
the price in Bitcoin terms is dramatically shifting downwards now because we're in this adoption phase, and you can assume that once we get to full market saturation and everybody's using Bitcoin, there's no other fiat currencies in the world. Let's say we're all using Bitcoin. That slows down. Eventually, but it still goes the same direction long enough time frame. It still depreciates over time. What that means is you don't have to go and get a mortgage to buy a house because that doesn't make sense for the lender. Um, why would I, why would I borrow? Let's use Bitcoin term. I'll just use big numbers to keep it easy. Why would I borrow 1 Bitcoin to buy a house, worth 2 Bitcoin, if by the time that's paid back to the lender, my house is worth 0.5 Bitcoin? There would be no incentive to ever take out a mortgage or take out a loan to buy those assets. And I think what happens over time is, well, technology is deflationary in nature itself. So technology should make the prices of everything less over time anyway, but that doesn't happen because of it's incongruent with the inflationary monetary system. They're butting heads together. So eventually you would have everything would lower to its cost of production. So the value of a house would not be there would not be this massive monetary premium on the house, which is what we have today. Houses are store of values. You would have a house be reduced to the cost that it costs to make the house. So the cost of the bricks, the cost of the wallpaper, the cost of the windows, those raw material costs will essentially be the cost of the house, maybe with a slight premium for the labor. But that's basically it. You wouldn't have this massive monetary premium on top of it. And what that does, that solves a huge problem that we actually have here in Ireland, which is the real estate problem here. You walk down any street, you throw a dart at Ireland, and you walk to that street, and you will see to let, dilapidated houses, high streets with empty shops, former shops closed down, and people can't afford the rates and stuff. And what's happening is a load of big, massive investment companies are just buying up whatever real estate they can get their hands on. They actually don't care if it's occupied or not because they know it's going to hold their value in fiat terms over a long enough time frame. So they don't care if anybody's in the house renting. They don't care if anybody's using the shop. They're just buying up those buildings, that they're buying up that land because it protects their value from what they see as risks in other assets like stocks and risk on assets and stuff.
Yeah, they're seeking scarcity.
Yeah, they're seeking scarcity. And the thing is, easy money chases scarce assets in an inflationary system, but scarce assets chase hard money on a deflationary monetary standard. So all that monetary premium gets sucked into the money. And eventually, given enough time, I envision the future. Like if you come out of university, 18 years, 19 years old, maybe you do like 6 months work and you can buy a house immediately, just buy it outright, because the cost of the house would be so low relative to wages, because the money itself, the money that you work for, holds its value, and it sucks the monetary premium from everything.
That'd be
So
hard. That'd be hard for people to figure out, but I can get there, and the only way I can get there is because our productivity over the last 50 years is like we're 10x more productive one human is. So let's
yeah,
say my grandfather, you know, 10 years of work before, or maybe four, I don't know, before he bought his first house. But now, let's say with technology, I can be 10 times more efficient. I can create 10 times more economic value than my grandfather could have. So therefore, I mightn't have to work for 10 years to buy a house. I might only work for 2 years to buy a house.
yeah.
And that's a big stretch. That's a big change in our
But
world.
it's actually not hard for some people to think. It's not too long ago. Like if you came
No,
back from
I don't mean it's impossible to happen. I just mean in terms
no,
of how our world would change.
yeah,
And I
like
think,
it's especially for young people, it's hard to envision because they see houses these days almost out of reach.
yeah,
But it's actually for some of the older people, it might be, for if you're in your 70s or 80s, it mightn't be too hard to figure out, because actually, if you came back from World War II, you only had to, in America, for example, you only had a year's worth of wages bought you a house after World War II. So it's not too long ago that was possible to just work for a year and buy a house outright. It's just all the excessive money printing from that time has bloated the monetary premium on every asset, and Bitcoin people describe it as a black hole of values. It is the black hole that will suck all this monetary premium from everything. Maybe not all of gold, because there'll just be people that will hold gold as a doomsday scenario. Like I can't remember who described it as gold bugs are pessimists, Bitcoiners are optimists. Gold bugs hold gold as a hedge against the complete catastrophic collapse of the global economy, because if Bitcoin fails and real estate and everything collapses, gold's going to be very useful in that phase. But Bitcoiners are optimistic that we can transition to a deflationary world, a Bitcoin standard, and fix the problem of money, fix the money, fix the world.
Yeah, it's awesome. So we were actually chatting in one of my groups this morning about it, and the text I wrote is, the world as we know it thinks in fiat terms, so we measure everything in fiat. So even really smart people, we were talking about Larry Fink and from BlackRock, how he done a 180, like a really smart person can get caught off guard, and a dummy like me could figure it out before him. But
I'm very skeptical. Have you read the news recently? BlackRock is joining with Coinbase.
Yeah.
That smells attack on Bitcoin to me. If I think, what is BlackRock's incentives? BlackRock's incentives are to keep the status quo. They are the biggest asset manager in the world.
They're the most invested in the fiat system. Yeah. So it's like, tread carefully. Larry may not be the white knight that we think he is. He could be, who knows? But it doesn't matter. The point of it is that even really smart people assess things through fiat.
Yeah.
Bitcoin continues, but if Bitcoin continues to succeed, it will change how we think as a civilization. As Jeff Booth says, you can't fix a system from within that system. And I'd say it's difficult to recognize the faults of the system when we're using that system to measure the new system. And Einstein said, doing the same thing over and expecting a different result, or doing the same thing over to measure something different, is insanity. And this is why I believe Bitcoin is going to catch a lot of wealthy people out. They're just not going to see it coming, because fiat promotes consumer consumption. Fiat standard promotes consumption, instant gratification through debt, and short-term thinking. But Bitcoin promotes more thoughtful use of resources and delayed gratification and longer-term thinking. And like that in itself, how we humans as a civilization think, the shorter we think, the higher our time preference, the more barbaric we act. And then the opposite is true. The longer our time preferences, the longer term we think, or the lower our time preference, the more civilized we become. And that's sort of my take on how Bitcoin will change how the whole planet as a civilization thinks, if it continues to be successful and sucks orange pills people one by one by one by one.
And you don't even have to wait till we get the Bitcoin standard to see that. You cannot, if you buy
individual level.
Yeah, if you buy Bitcoin today, and let's say you buy Bitcoin today and you wait a couple of years and it's up, 200%. There's a saying, you don't change Bitcoin, Bitcoin changes you. Every time you make it from that point onwards, every time you make an economic decision, you will have that in the back of your head. That 20 quid that I'm about to spend on this thing that doesn't really mean anything, they don't really need, could otherwise go into Bitcoin that's going to appreciate by 100, 200%, given enough time frame, whatever. That's still sort of thinking fiat in terms of the percentage increase. But what I'm saying is, given enough time frame, the money is going to hold its value over everything. Everything's going to decrease in value over time versus Bitcoin. So as you said, that lowers your time preference. That means every single economic decision you make, you do it like, you make the choice that, do I really need that? Is that essential? And if it is, you spend People think, for example, people think I don't spend my Bitcoin. I don't sell my Bitcoin, but I'll spend. I will spend if someone is willing to accept Bitcoin. I will absolutely. I'll spend and replenish, but I will spend it because that incentivizes merchant adoption. It incentivizes other people to use it. But I will make that decision. And like for example, I'm actually saving for a wedding for next year, but fiance came to me, showing me the price of flowers. I'm just thinking, oh, that's a lot of Bitcoin. that's that's a lot of sats that I could other like. Could I do a wedding without flowers? I could, she can't. So unfortunately, it is an essential expense. But I'm just thinking every day that I'm starting to think in Bitcoin terms now. Everything I'm pricing in Bitcoin terms, and it's like as you say, it's that lowering your time preference. It allows you to plan for the future as well. If you know that your value is going to hold value, or your money's
Yeah,
going to hold value.
every decision that you have to purchase something, every single thing, when you have a money that can hold its value over time, it'd be or as you in the present, we have a money that increases in value over time. Then the decision comes: do I really need this thing? Like, do I need it today? Do I have to have it?
Yeah.
And if you have to have it, well, then you get it. But then it's like, well, not really. No, I'd rather like give up work in 10 years and spend 40 years traveling the world and having the crack.
And that give enough time, that creates a true free market economy. It creates a very efficient economy, because if you're coming to market with something that people don't need and don't want, and they don't want it and they don't need it and they don't buy it, you fail as a company. And if people think failure as a company that's a bad thing, it's actually not. It's actually a good thing. It sends a signal to the rest of the market that the thing that this company was bringing to market, or the way that they were doing it in, wasn't right. It wasn't efficient. It wasn't needed, or maybe it just wasn't time. Maybe they were ahead of their time or too late to whatever. And someone else sees that and thinks, well, I can do that better, or I can make that
That's
product
marketing.
better.
It's how
And
we
it just,
grow.
yeah, we basically progress. Now, if you look at it today, what do we have? A very inefficient market. We basically have socialism for a few companies where they can't fail. They're too big to fail, and that creates a very inefficient market where, um, here's one for you. The UK government spent all that billions and billions on PPE that was inferior. It was inferior, and it was just tossed to the side. Waste of money, inferior product. Um, but we have so many zombie companies, so many companies that basically are just surviving because of the constant monetary printing. They're not bringing anything that the market needs to market. They're not, if you're a value investor in today's market, you cannot pick a single company that you can think or operating efficiently or operating well, because even the ones that are operating well, they're so out of whack with the valuations. Like Apple and Microsoft and all these big companies that do bring great products to market.
But they've got a monetary premium on them.
Monetary premium, they hold lots of assets that appreciate. They are the big benefactors of this constant asset inflation as a result of the increase in the money supply. So when you when I try and look at something, I try and look at it in terms of there's a saying called Bitcoin denominated exit liquidity. So if you value, for example, if you value Apple stock, the Apple market cap in Bitcoin terms is like 44 million Bitcoin, but we know there's only 21 million Bitcoin. That's theoretically. So what something has to give there. Either we create more Bitcoin, which we're not going to do, or that company is overvalued in terms of Bitcoin and it's going to be worth less Bitcoin given enough time frame. So that's how I came to the conclusion of only owning Bitcoin, even versus other cryptocurrencies in the long run. Is Dogecoin worth 500,000 Bitcoin? Not a chance, not even close. Is all these other companies worth more Bitcoin than there is in existence? No. So given the only thing that makes sense to own over a long enough time frame is Bitcoin. It's the only thing that makes sense now to own for a long run, other than maybe your own home, because that has utility. You actually live in it. So that's how I came to my conclusion. Bitcoin only, the only thing worth owning for. Yeah, like don't get me wrong. If you want to take pot shots and gamble, and if you want to back a horse, if you want to throw money into something and hope it appreciates over the course of a month, a week, a year, whatever it is, it's a free market. If that's what you want to do, you want to take on that extra risk, that's fine. That's not for me. I actually used to gamble, used to play roulette, used to back horses, used to back football teams, and I just don't bother with it now. I just don't see the point in it. That's just me. I'm thinking, well, yeah, I could put a tenner on that, and I could go to 100 quid if I get a footy accumulator up. But I can just buy some sats with it. It'll appreciate it over more long enough time anyway. So, and that's what I do at DCA every week. Just let the if I finish the week with more sats than I had the week previous, that's all that matters. The price is just I don't even think about it anymore unless unless something big's happening. I'm looking if it takes a 30% correction, here we go. That's what can I sell to get some extra money? And then if there's big dumps, I'll take advantage of those. I'll lump some, buy some dumps maybe, but other than that, yeah, just DCA and accumulate as much as I can.
Yeah, that's awesome, man. It's been a great conversation, Con. Before I let you go, though, I'll ask my final question that I asked for a bit of fun. What would you speculate on the price of one Bitcoin in 2030? You can give me
2030.
bullish and a bearish, but I will push you for an answer.
Yeah. Given that time frame, you're really asking me what fiat worth.
In fiat terms, yeah.
Yeah.
We'll assume we're still on a fiat standard in them.
But I always maintain that I think Bitcoin will get to a million, talking in dollars here. I think it'll get the $1 million before it gets the block height 1 million, which I think is 2028. So I think it'll get the 1 million by then. And you have to take into consideration what will other consumers think by, like, people think this is, there's still people that think this is a bubble, that it's had maybe this double pump and it's coming back down, and maybe it'll level out maybe around 50K or something, or its previous all-time high. Maybe it will hit 100,000 and it'll just bobble around. There comes a point where there's given enough. We've only had really 2 cycles where there's been media attention. There was media attention in the big run up in 2017. There's been media attention obviously with Tesla and MicroStrategy and everything adopting Bitcoin. But you have to wonder, in the next rally up, considering that there's been 2 massive media things, and we now have a country adopting Bitcoin, what will the media frenzy be like when it blasts through 200K, 300K, and 400K? Maybe falls back down to 200K, and people again, like they always do, signal, "Oh, this is it. This is the end. This is it. It's crashing to zero."
Yeah, it'll be like, fool me once, fool me
Yeah.
twice, fool me 4 times. How many
Yeah,
times?
it's like how many times is it going to take? How many times can the media print FUD? How many times can people ignore it before they think, right, I need to start getting this? And you can already see this is already starting to happen in a lot of people's minds in terms of big players, NYDIG, or they have a lot of, and then the whole BlackRock Coinbase thing. It's like, I think as an attack on Bitcoin, I think they're going to try and issue a lot of Bitcoin that they don't have, in terms of they're going to rehypothecate a lot of Bitcoin, and I think they're going to try and suppress the price. But you can't do that with Bitcoin given a long enough time frame, because it's a bearer instrument that you can take custody of immediately. So given 2020, 2030, I think once we blast through 1 million, whenever that is, I think that it's going to be run away. I think it's going to be a J shape straight up. So I mean, probably 10 million 2030. I think we're blasting through valuations. I think that's when we start hitting an inflection point in adoption. Once we hit an inflection point in adoption, where adoption starts going vertical, things will get extremely. People think Bitcoin's volatility will actually lessen over time. It's not. It'll lessen in the interim, medium term. But once we hit that inflection point, Bitcoin's volatility will spike, similar to the Weimar Germany episode, the paper Weimar market was like this slowly gradual increase, and then it just went hyperinflated, whereas the volatility actually increased as it died. And I think that's what you're going to see as fiat heads towards its death. You're going to see this increase in volatility. You're going to see, like, it could go to 10 million, down to 1 million, back up to 20 million, down to 15 million. It could be all over the place as we approach inflection point, because there's going to be people that just do not know how to value it. Um, as people lose faith in the currency, valuations are going to come completely out of whack and everything. So I think it'll be an extremely volatile, extremely chaotic time frame. I think the next decade will be extremely volatile, extremely chaotic. There's going to be a lot of wealth destruction. There is no way there. If we can stretch the fiat system out longer, that's better because um, it allows us more time to educate people and get people on board, get people on the arc, and safeguard them. If it, for example, if the fiat system were to crash tomorrow, look at the amount of people that would be left with pretty much no Bitcoin. There's like less than 1% of the world probably understand what it is. So it's our incentives to hope that the fiat system continues long enough so we can get enough people on it. But I just don't think it will. I think once enough people start figuring it out, there'll be a rush on Bitcoin. There'll be a rush to get as much Bitcoin as you can get, and that'll increase the volatility. It'll actually also add to fiat's demise. A fiat's demise will be exacerbated by having a lifeboat to jump to, something else to jump to. Like if there's no Bitcoin in the world today, it would be screwed because gold would be the obvious thing to jump to, but you couldn't. There's so many paper IOUs of gold and there is actual gold that you wouldn't be able. The price wouldn't. It'd be. That'd be the worst case scenario. Imagine there was no Bitcoin. Holy freak! But yeah. So, by people think this fiat system going to go on for decades. I think we're already starting to see the death rattles. We're between a rock and a hard place. We can't raise rates to tackle inflation meaningfully. We can't have unemployment reach high enough point. They need to kill demand in the market, but only up to a certain point where if unemployment gets to long enough or high enough rate and delinquencies and defaults start happening on homes, and because real estate is it's 350 trillion. It's the majority of the world's wealth is held in real estate, and already you're starting to see those things tip over in China. China's 50 trillion. China real estate alone is 50 trillion. It's the biggest biggest geographical store of wealth in the world is Chinese real estate, and it's already starting to tip over, obviously with the Evergrande contagion and all that there. So you can only kill demand and you can only push for a recession so far as once real estate starts tipping over and once unemployment starts going up, they have to pivot. They have to pivot and they have to throw an ungodly amount of cash at this system. And I think and to a point that'll make the COVID stimulus look like pocket money. So how many more injections of crazy amounts of monetary stimulus can the system take before people lose faith in the currency? And I think one more, because Japan looks like it's ready to have a currency crisis because it's initiating yield curve control. The euro is on the brink because they're already having to enact yield spread control between the north and south, between the countries in France and Germany. They're having to basically punish them to pay. They're basically robbing Peter to pay Paul. They're punishing them to save Greece and Italy. I think Italy will be the first country in Europe to revert back to their old currency, the lira, because the euro is killing them. So credit default swaps in Canada are out of whack. Greg Foss has always been saying that they'll be the first G7 country to collapse. I think it'll be Japan. It could be Canada, and it could be the Eurozone. So you're probably going to see the first real crisis of a G7 country in I don't know how long. Turkey, Lebanon, Argentina, they're all on the brink. They're big nations with massive populations, big economies. So how long can the system go on? People like to think decades. I just cannot see how it can make it out of this decade still intact. And I think Bitcoin will be the thing that accelerates. It's going to be the signal. I think the next real big run up will be the signal to people, right? I need to get some of this, and then if it comes back down, if it has a crash and comes back up even further again, I think people will just say, okay, that's it. Bitcoin. This is it. We need to own Bitcoin. Need to own only Bitcoin, nothing else makes sense to own. And I think that's when you have if you think of a bank run, people run to the banks to try and get their money out. I think the opposite will happen, where people will run to the exchanges to try and get as much Bitcoin as they can get their hands on. And at that point, you'll have exchanges. There comes a point when when exchange says to itself, well, if everybody's trying to throw fiat at me to get this Bitcoin, do I
Well,
really want to part ways with the Bitcoin? Do I really want to accept Lebanese pound, a Turkish lira, a US dollar, a euro, a hyperinflating Japanese yen? And eventually, exchanges are just going to cut off. They'll start off by cutting off developing currencies, and then they'll start off by cutting off pretty much every other currency, and that's when you have pretty much a lockout where people can't get Bitcoin, but everybody's trying to get Bitcoin. Now, you think of that in the word. You think of a world where exchanges aren't selling Bitcoin. What other ways can you get Bitcoin? Well, you have to entice other people who have Bitcoin to sell it to you. And that's where you'll see massive arbitrages. You might see some exchanges listing it at 10 million per price, and you'll have another exchange listing it as like 13 million per price or per unit. And so you'll get this massive volatile arbitrage, where you have to, if you're a millionaire, for example, you'll have to offer millions above what the stated price is to entice someone to give you Bitcoin. Probably you'll probably have to meet them in person, give them cash or something. I don't know, but because there's like 56, 57 million millionaires in the world, there's only 21 million Bitcoin, so there's like less than half of a Bitcoin per millionaire. So it's at what stage do those millionaires, the billionaires, the big tech companies, other nations start flooding into this Bitcoin thing to try and get as much of as they can? That's why the most important thing now is to educate people, is to get the people, your average citizen, average Joe, who's, most people don't have time to keep up all this stuff. Most people don't have time to go down the rabbit hole. Most people don't have time to look into the macro world and what's happening in macro, because they're
all their time.
because they're on the rat race. They're constantly working week to week, month to month. They can't think of anything else. They want to make sure they can put food on the table for the children, keep a roof over their head. That's their concern. They don't care about digital tokens. They don't care about distributed ledgers. They don't care about the macro environment. But that's why it's probably the most important thing is educating people what Bitcoin is, and even if just get off zero. That is the main message. It's more risky to own none than it is to own some. I can't tell you how much you need to own. That's up to you. That's up to anyone. But just don't have zero. Get off zero. Get a tenner's worth or something. Get if you have a bit of spare change and you're not going to do anything with it, there's apps where you can just DCA, and it just buys automatically. It takes tenner out of your wage at the end of the week or whatever, and you just slowly accumulate. And if it turns out this Bitcoin thing crashes and fails and doesn't work out, well, you'll have lost like tenner a week or something. So it's not, if you don't have time to look into it, if you don't have time to go down the rabbit hole, just buy a little bit, buy an amount that you can afford to lose and leave, but just have some. Just don't have zero. That's probably the main message you would say. Just educate people, but just make sure they don't have zero.
Yeah, good advice, and I've sort of been saying that as well. It's like it's only going to get harder to buy Bitcoin in the future, so accumulate some now, and like that, forget about it, lose the wallet for a decade, and hope you don't need it. Obviously, as Bitcoiners, we don't want, most Bitcoiners like, oh, I want Bitcoin to go really high numbers, but if it goes high numbers, the world's going to fall to shit, and it's not going to be a nice place to live anywhere. So you're trying to balance that out. You're trying to educate people, and that's why I think every Bitcoin, it's all our duty. Once you understand it and it does good by you, it's your duty to teach someone else about it and show them, because if you understand how fiat has screwed you for your whole life, and then you start to understand money and you learn Bitcoin and life became better, you have more time to do things that you want to do and spend more time with the people you want to spend it with. Well, why not show other people that? And because the bottoms up movement, the one thing I did think about, Con, as you were chatting, I didn't mention it, but because I'd go to the conferences, and I'll go to, like, I'm going to Bitcoin Amsterdam, but most of them are crypto. And when you go there, it's just a hive of money and activity and networking and marketing, and there's never a Bitcoin stall of it. And sometimes I'm like, what is going on here? But then I'll talk to people, and I'll go up, and I won't name names, but I'll talk to people who be pretty senior up in Irish companies, and other companies, and they won't come on the podcast because they're like, oh, I can't talk. But they'll go, oh yeah, Dinny, it's all about Bitcoin. And I'm like, why the fuck are you, what's all this stuff? Like, why don't you're organizing this thing. Why don't you have a Bitcoin stand? And it's just, and again, it's nothing bad or evil. It's we all operate out of self-interest. And if I have a company, I can make much more money promoting something different. But then I'm like, Bitcoin doesn't need it. It's just going to eat the world anyway.
Yeah.
And in the interim, we'll all, take our share and leverage other things. But I don't think Bitcoin needs it needs top-down marketing. It's bottoms-up marketing that it gets from individuals who get it and understand it.
Yeah, and one thing we probably didn't talk about is um, Bitcoin, Bitcoin's energy in terms of it incentivizes the build out of renewable energy, but because that's one thing. If you're in government, you're looking the first. If you type in Google Bitcoin, the first thing you're probably going to get is a foot article about its energy use, for example, and about it's boiling the oceans and all the rest. And that's if you're a policymaker in any country, and that's you don't know anything about Bitcoin, but people are asking you about it, so you decide to Google it, and the first thing that you're being bombarded with is things about energy usage and it's bad for the environment and all this here in a time where climate, climate the climate crisis is at the forefront of every politician's mind. It's the thing that you see in the media all the time. So they even if they don't know anything about Bitcoin, they immediately have a reflex to shield themselves from that and sort of stay away from that, even if they haven't read into it too much. They just don't want to be they almost take a neutral position as a defense mechanism, where they don't want to, just in case there is something to do with Bitcoin and its energy use, they don't want to be associated with that in case that hurts them in terms of their ESG goals and all the rest.
Yeah, the irony being that if they actually got behind it, they'd probably get more political support than any other means that they would have.
And look, I'm not a climate scientist. I don't know anything about that there, but I do know about incentives, and I do know about um the call. If you look, I'll just take us here anyway. But if you think about renewable energy, think about solar and wind and all the rest. Those are they're extremely cheap, and Bitcoin miners are incentivized to go where the cheapest energy is. Of course, they're extremely cheap, but they're not reliable. Solar's not reliable at night. Wind's not reliable. Wind's not reliable when it's not windy outside. So you have different. It's a very unreliable source, and the energy grids are very, the energy grids we have today, like I think it's like 40%, maybe even more than half, is wasted or stranded. So in the interim, as we transition, Bitcoin miners actually are the flexible load that can tap into the energy grid and account for those lower levels of demand. So when you have these high demand areas, Bitcoin miners can shut off. When you have these low demand areas, when that energy is going to the grid no matter what, but if it's not being used, then it's essentially being wasted. But in those low demand areas, you can turn on the Bitcoin miners. They'll take on the energy from, they'll take on that energy and monetize it. And so it means not no, you'll never get 100% energy use. There'll always be some wastage, especially in transport, but you'll get efficient energy grids where the energy we're using is all used, because the part that's not being used by the population is monetized in the form of Bitcoin. And what that does is that allow, like, the reason why we can't build out, the improvement of the energy grid and the build out of all this renewable takes a huge cost. It takes lots of infrastructure, it takes lots of cost, and that's unfeasible unless you have Bitcoin miners. If you have Bitcoin miners, you can monetize. You can essentially transition the entire grid. There's one I was looking at. Someone sent me. I can't go. I don't know the technical details of how it works just yet, but I was reading about it off the coast of Hawaii, in that tropical region, in the tropic right across the world. it's an old technology. It's like 100 years old. I think someone came up with a theory of taking the cold water from the depths of the ocean and the surface water at the tropical region, and there's like a 20-degree differential between the two depths, and you basically, that heat difference, um you have there you can build like a refinery. You can build sort of pumps that I think you use, what is it, liquid ammonia or something, and it basically creates power from the difference in water temperatures. But the reason why that can't be built out now is because it's such a costly, I think someone calculated you would have to be paying 50 cents per kilowatt hour, which is nobody's going to pay that. Nobody's going to pay 50 cents to a dollar per kilowatt hour of energy. It's just too costly. The operation too costly to build. The energy is too costly. But that's where Bitcoin comes in, because Bitcoin miners can reduce that cost, because they'll take the access cost. They'll what they'll do is they'll drop the cost of the energy. They'll drop the cost of the operation, because in the interim you can monetize it. You can use the Bitcoin to fund the project. And if you can create that, that's free and abundant. It's not exactly free; it'll be free over time, but that's abundant energy for the entire tropical region, which is like a billion people. So you'd be able to create abundant energy for a billion people in the tropical regions just by doing this one thing. And then, if you take solar and hydro and all these, nuclear and all these other things, and you monetize the low periods of demand, that allows for the build out of massive infrastructure for, like, Bitcoin solves the if you think there's a climate crisis, if you think there's an energy crisis, if you think there's an energy grid crisis, Bitcoin literally solves all of those things. We say fix the money, fix the world, but we're actually serious. It fixes most things. It can fix most things in the world, and there's whole various other things that it fixes as well, especially around incentives and consumer behavior and stuff. But yeah, like, if you're a politician and you're thinking Bitcoin is energy intensive, or it wastes too much, it doesn't use enough energy. It needs to use more energy. That is the takeaway from that. It needs to use more energy. People think, there's like a carbon output or something of Bitcoin. The only waste of a Bitcoin miner is heat, and you can use that heat. There's a Bitcoin miners in Amsterdam. They use, I think it's hydro, a mixture of hydro and something else, renewable sources, to mine Bitcoin, and they have all their Bitcoin miners facing into a greenhouse, and that heat is being used to grow orange tulips, and they sell the orange tulips. So they're using every aspect of the energy that the Bitcoin miners are using. So there's actually no wastage. So over time, Bitcoin needs to use more energy. It needs to monetize the build out of renewables. It needs to monetize the build out of all these projects that allow for free and abundant energy that would otherwise be too costly. And I think over time, given enough time, and this is another thing on a Bitcoin standard, if in 50 years' time we have free and abundant energy because of the improvement of energy technology, if every citizen is getting free energy directly to their homes, maybe you get a certain amount every day or whatever. I imagine a world where houses are built with Bitcoin miners, one Bitcoin miner installed in the home, for two reasons. During the time in the day when you're using the house, the electricity, the TV, and whatever, and all the rest, the miner's off. The Bitcoin miner is off. And when you go to bed and sleep at night, you turn the Bitcoin miner on, and it does two things. It mines Bitcoin. So if you think of maybe small community, we could have small community pools. You could have, the way you have mining pools. So they all go towards a pool, and the block rewards distributed equally among everyone in the pool. I envision a world where everyone has a Bitcoin miner, and you have basically what's called almost like a postcode lottery, where you would have, let's say I'm here in Armagh, you would have the Armagh mining pool, and maybe every 2 or 3 years our mining pool actually wins a block, and suddenly we get all this you load up your wallet someday and, oh frig, we want a block reward. Or you can solo mine and never win it, but I don't think that'll. I think everybody. I think we'll. You know, people say that mining pools are very centralized. There's big, massive mining pools. I think over time those distribute and sort of level out, and you'll have country mining pools and provincial mining pools, and you'll have sort of community city-based mining pools. And I think given enough time frame, if everybody has a Bitcoin miner inbuilt into their own home and they're getting free sources of energy, you'll have this sort of postcode lottery of mining rewards being distributed to all different pools around the world. And the second thing is the heat in your home could be, if you have a bunch of ASIC miners, that heat can be used to heat your water. It could heat your home during the winter or whatever. So you're using the energy that's not being used, that's going to the house, and you're also using the energy that's coming out in terms of the heat of the Bitcoin miner. So that's the potential. That's a potential world that we could live in 40, 50 years. That'd be a very nice world to live in, free and abundant energy for everyone. That'd be pretty cool.
Yeah, most definitely. Amazing insights. Conn, it's been great to chat to you today. Um, is there anywhere where people could follow you or your
I'm
work?
usually quite active on Twitter. Conn Stevenson 90 at Conn Stevenson 91, I think is my thing. Yeah, at Conn Stevenson 91. Yeah.
I'll stick it in the notes. Conor, thank you for your time today. It's been awesome to come on and and go deep, and it was really insightful and learned a lot. And hopefully we can chat again in the future. But I'll chat to you just after in the after show. But for now, I'm going to sign out and say, Dinny out. Thanks very much, Con.
Cheers, Danny. I'm great.